started here. Last week of October, FOMC week, Tuesday, Wednesday with the press conference, Wednesday at 1 Central. Today we open up strong, so it's one of those things. Be careful if we open up pre-market and go up. You don't want to be selling it all the way up because the shorts coming out of the weekend had no chance. We opened up on the session high. We were strong on Friday, strong overnight. So we opened up around 32, 33 after a Trump tweet kind of rally about phase one being a done deal. Anyways, market was looking for an excuse to go up, rallied, got a bad Dallas Fed number, which kind of locks in the Fed doing quarter point on Wednesday. Dave brought that to our attention. And so we get this next move up, which was right in here. So the rally after the open, straight sideways, looking for excuse to go up. The best chance, Dave was on this more than I was in real time, was this long up down bar and gravity, as he put it, taking over, taking out the bottom of this range. So once they got to be down in here without knowing what the rest was going to be, like that, we don't know that's going to happen. But if that's going to happen, if this downside is going to happen, and this market breaks down into here, there was resistance up in there we talked about. And why was there resistance potentially up in there? Was because that's where a lot of inventory came out and then where it sped out to the downside. So this looks just like a lot of numbers and colors. But if you just concentrate on rotation for a second, this is the bar up, bar down, best move lower since the open. It has longs a little nervous because it's the best move lower since the rally. Nothing before that got longs nervous. Now they're a little nervous. A lot of inventory came out here, and right below it, it got a thin spot. So when you get a lot of inventory with a thin spot, often people who are stuck long in here are nervous and they become the baby birds in here. They're stuck long trying to get out, and that's why that often becomes a good spot to get short, a good spot to look for resistance, anticipating that if the downside is going to stay intact like it did, the rotation should end somewhere in there. Took a while, but it finally continued lower without going above that area. So in real time, you can anticipate that. You know where you're wrong. You have an expectation for when you're right. It doesn't feel like a good guess. Order flow and using order flow to find good real-time support resistance is what's important. You're not going to have support resistance at this level at 40.75, 40 quarter before the day started, right? We're not even going to have it right here at 9:30. It was after they ran it up and ran it down did this become resistance. So what's most important when trying to pull support and resistance, which everybody uses, everybody has different vehicles to get them there, but one thing that's important to separate you from most other traders is the real-time support resistance, because the best support resistance comes from other people being stuck in the market. And unless you learn trading that way, you're never going to find the best support resistance, and you're never going to put yourself in a position to confidently trade it. You have to know why. Why is it support? Why is it resistance? A lot of people start just with lines on a chart. They understand what support means and they understand what resistance means. But they don't understand why they would get there. Why would they come there? Why would it be resistance? Because the market is just going to go up to a price and everybody says it's resistance, sells it and goes down. That's when it doesn't go down, when everybody tries to sell it. Because then everybody turns into a buyer. After you sell it, you're a buyer, and it creates less likelihood it's going to go down. So you got to know why support would work, so resistance would work, why they would be there. And the more real time it is, the more accurate it could be, and the better locations you'll find, the better your timing is, and then you at least got a chance to be consistent. And you throw all those good things in front of you, and you still got to deal with you more than you have to with the market. That's why it's important to be around people, good people, not just people. A lot of people find communities and think they're all good communities. Not necessarily. You want to find good people, like-minded people that collaborate and talk about the right stuff, like order flow and correlation and news events, not about just profile or just Fibonacci or just, one theory. That's a lot less relevant than what actually moves price. Buyers do, sellers do, other markets do. And when people are trapped and emotional, second mouse gets the cheese.